Come on. Hello, everybody. Jim Malone here, coming to you live on Dallas Trading Floor. Try to get my TikTok up here. Let's see. Okay. Hopefully we're live now. We've got, yeah. Okay. Looks like we're going. Let me just get the TikTok up here, and we'll start with the show. So thanks for everybody stopping by. Just been working on the new Discord room. Pretty exciting, and that's being rolled out basically. And just going to show you trades in there that I've been making and some of the other things. So there we go. We're almost ready to go live on TikTok. Great. Okay, so we are live on TikTok. We are live on YouTube. So very good. All right, here we go. Thanks for holding on, everybody. Very much appreciate it. Well, Bitcoin is up again, and very interesting because I basically opened a position in GBTC, Grayscale Bitcoin Trust, and it's done very well. The S&P isn't doing too good, and the Dow Jones isn't doing good. The small caps are doing good. The Nasdaq is down too, so a lot of weakness all over. I mean, we're still in a confirmed uptrend, but it's kind of weak out there for some of the stocks. So, got to be real careful on this whole thing. So, kind of wanted to go over with you the kind of the winner chicken dinner of today, and that is the GBTC. And of course, I use this for a proxy for Bitcoin. This allows me to get in and out of Bitcoin as it's moving up. I do think that it looks like Bitcoin may be going above that $60 mark again. I want to show you an interesting chart that I have on Bitcoin here, and that is we're off a little bit, but I do think we're going to see it move beyond the $60,000 mark. So, kind of a good way to play it. The way I like to play it is with the GBTC. Now, the GBTC doesn't move directly in lockstep with the price of Bitcoin, but I do think that we do have an ascending base, and that's very nice on this. So, I'm pretty confident that we'll be building up a little bit more on Bitcoin. It's up $1.11 today, about 2.24%. So that's pretty good, and that's pretty good. So this is the way I like to play Bitcoin. And again, this is the Bitcoin chart basically, and it's up just slightly, about 1.86%. They don't quite is again the GBTC and the Bitcoin price don't quite work in total lockstep. So a little bit of difference there, but this is not necessarily, we're in a kind of a good trend. Unfortunately, in a bad trend is the QQQ. I don't think it's time to go to the SQQQ yet, but I think we got to get ready potentially to short that. You don't want to short though this index right now because we're in an ascending base, and I mean we're in a market that is still in an uptrend, believe it or not. But do we definitely have a downtrend here where there's a lot of weakness in the Qs? Now, what are the Qs? Well, the Qs are the top 100 stocks that are in the NASDAQ. They're in the NASDAQ 100. They're, Apple and those kind of stocks. Apple and many of the other tech stocks have been doing very poorly as of late. So we kind of want to keep out of that area. We kind of want to move to areas of the market that are going to help us more just with this reallocation of capital. So that's a really important thing to look out for. Also want to show you the S&P. Now, interestingly enough, in the S&P, there's more of these relatively smaller cap stocks. This is the 500 largest companies, basically the Fortune 500. And it's off a little bit today, too. So, we got to be careful. We kind of want to, possibly steer clear of a lot of the tech issues that we've done so well in the past. We kind of want to steer clear of that because it does look like we have a situation where there is a reallocation going on. And so a lot of things that worked last year, like Tesla, probably aren't going to work as well this year. Tesla's been pulling back as of late as well. I just wanted to update you on a trade that I made that I put out here. It was the Roku bear calendar trade. And basically, initially what we had done is we looked to we thought the 200-day moving average is going to come down to about 250. Well, it's moved up a little bit, but we've made money on the trade, so I'm going to probably close the trade. Now, as of this, the trade's worth about $780. I may probably about $725 based on this trade. Now, of course, I had two contracts, so it's a little bit larger than that. But I'm going to move to close my position because Roku has been moving up, and I just want to kind of capture all the money here. But this is sort of the update. So if you do have that calendar trade, that bear calendar trade on Roku, you might want to consider, and that I put out, you might want to consider closing that trade right now because you could probably hold it longer and it might go up a little bit more, but it's kind of a bird in hand thing. I think you just want to take the money and run. So that's kind of my take on that. And this is a Roku. This is a chart of Roku. It's up $10 today. This is the reason I decided, well, I'll just change it. It had a nice movement down to about that 250 level, but I'm just like, well, why chance it? Why not just close it now and take the money? Because this may be the beginning of a reversal. We don't want to give up any money if we don't have to. Made some nice profit on that one. Here's the stocks that I'm holding long currently. I'm still in lows, and it just continues to go up. It's very kind of slow but sure, but seems to work out. It's low, LOW. It's a little bit extended now. I did buy it from a proper base, and it's a little extended now, so you probably can't buy it at this point. As I said yesterday, I bought the GBTC. It's up a little bit. Also, I'm in Fluor, which is basically a very large construction company. It's up about 3% today, which is amazing. And Ford looks like it may finally be making a move higher. If Ford makes a move higher, I probably will move in with some more stocks. So basically that's it. I'm about half in cash right now in the small portfolio. So I'm about half in cash in that one, and the rest I'm pretty much doing just some option trades. So thank you for that. Let's get to some of the questions here. Basically, do you think that TDOC for long term like this? Let's look at Teladoc. I'm not too bullish on Teladoc right now. I'll be honest with you. But let's look at the chart. I was more bullish, but I think that it's going to be more difficult going forward. So I'm going to take a look at Teladoc here and see what we've got in way of that. So let's look at TDOC. All right, and moving over to the Teladoc chart. So basically, here we are with the Teladoc chart. I'm not liking the fact that it's below that 200-day line. I just think that it's just not a good time to be in Teladoc. This is the daily chart, but let's look at the weekly chart to kind of see if we can, see anything better. This is just broken. This stock is breaking down, and what I think is going to happen, this may be a very good shorting candidate. I do believe this will be a good short candidate because as it breaks down below the 200-day line here, then I think we're going to see it probably rally. If it can't hold that, once it's pulled past the 200-day line and the 40 days above it, that means, at least with this relative strength, that it is moving downwards. So I am looking probably to short this, and that's really what I'm looking at. I'm not short. I'm not short on TDOC right now, but I think that might be a good thing. Now, if you want to get more information, if I will be sending out an alert on this one if I do decide to short it, and that'll be through the Discord room that we've put together, and it's kind of interesting. Some people have already taken advantage of this, which is great. But basically, the Discord room is available, and I'm on some of these trades. Part of the problem is, of course, closing them. It's a little bit difficult. So I will be anytime I close anything, I will be updating that Discord room immediately. So you'll get pinged on it if you're in the trade. But this is how you could take advantage of the Discord room. It's www.vinny.com/Dallas Trading Floor. So we do have a special on it too, by the way. Some of it is free content and some of it is paid content, but there is a special for the first 50 people that sign up. So I hope that is of interest to you. All right, so that's really the thing I'm going to say on Teledoc. I just think you just got to be super, super careful. What stocks are you looking into right now? Well, you know what? I am looking at a lot of the oils. That's sort of been an area that I've been interested in, and the reason is really just because of the strength of that particular sector of the economy. So basically, what I wanted to let's look at that. Let's see if we can. Sometimes, I'm learning. It's the more I learn, the more I know I don't know about pulling up the appropriate things. But let's take a look at the sectors here, and these are the sectors. There's 197 sectors of the of the market, and I want to look at basically the top ones because I want to see where the money is moving right now. Right now, these are the top. Now, the number one is still Royalty Trust, but there are some that are E and P. This is number 9 on the list. This is one I'm particularly interested in because there are a number of stocks. Also, the U.S. E&P as well. This is now number 4 on the list. So a lot of interest in this sector from the fund. So let's take a look kind of at this fund. I'm going to show you the monthly on this one. This is kind of why I think you need to start looking possibly in this area. And I'm going to hopefully come up with some good with the good. Now this chart here is not of any one particular stock. This is of the sector. Okay, so basically it has just been an absolute dog. I mean, look at this. Since 2007 it's just been down, and then we hit 2020. Boy, it just pulled way down and then it popped up. But I believe we have a reversal here. And why is this significant? Well, because there are stocks in this that are maybe setting up for a good movement up. So that's kind of what I'm looking at. So here's kind of the choice of stocks. These are all the stocks that are currently in the list. Now, some of them I've already put in the small portfolio. One of them is Denbury Resources. It's a relatively new issue because it was an existing company, then it was taken private, and then it was then it came out again. As you can see, it's just moving very, very nicely. This is in the small portfolio, and it has been doing very, very well for us. And it's up about 1%. This is kind of where I recommend. Now, this isn't really a true buy point on this Denbury Resources, but anything above about 46.37 is probably going to be a place that you might want to look buying it because this is a very characteristic shape of it going higher. So this is one I like very much. Denbury, DEN, is the symbol there. So thank you very much for that, Will. I think that's great. I'm also liking another one called FANG. Isn't that a great name? That's the symbol of it. It's Diamondback, and it's based in Midland, Texas. FANG is the symbol, and it's called Diamondback Energy. It's pulled back a little bit, not quite as good a chart as Denbury Resources, but I do believe we're going to get a reversal at the 21-day. So, so basically, the one I like in this group right now is Denbury Resources, DEN, because I really like this chart. I think it's just a very strong chart. And that's the kind of chart that you want to buy. This is a very weak market right now, so it's getting tough to buy good stuff that's in a good position. And I do think that with some of the oils, it's giving us that opportunity. But we got to it's got to step up on it because So I'm going to try to be putting out some more information on oil and gas stocks. I'm particularly interested in them because they've been so beaten down as a sector. And when the economy reopens, I mean, I'm not really a big betting guy. I'm more like a speculator, but I do think that there's going to be an increased demand for oil, especially in the U.S. and because the price of gasoline has been going up. So I think that we're going to see some renewed interest in some of these beaten down oil stocks. Now, are they going to be the next Tesla? Probably not. Probably not. But here's the thing about Tesla right now, and I still am a Tesla bull, so I'm just not in the stock currently. I just kind of want to show you why, sort of what's happening. This is really the stock that defined last year, defined 2020. It was just terrific up until about January, and of course I would try to be in it, but I had to basically get out when it moved below that 50-day line. As you can see, it really just hasn't recovered yet. Now it's pulled up today. It's up $21, but the trend on Tesla, unfortunately, is still downward. So we've got to be careful of that. This one could potentially be a short coming up. It's not yet. It's not, but it potentially could be a short coming up. So that's the kind of thing. That's what we've got to kind of compare. We've got to compare kind of where the markets are. With Denbury Resources in particular, and I keep talking about this one, again, we have in a very troubled period, we have a very nice chart. And basically this is from basically January, as you can see. Up through January it was moving nicely, but basically in the same period of time that Tesla was moving down, this one was moving up. So basically from about the January time frame, as you can see, we've just been moving up very nicely. And that's because this sector is ranked number 4. So it's very, very good. I just want to show you Tesla again, kind of compare it. And the reason I want to compare it is because, every dog has his day, really. And as you can see, this is about the same time frame that we were talking about the other chart. You see how it was, Tesla made essentially its zenith right here? Okay, well it did. And just since then it's just been pulling back. Nothing wrong with it, but it's just repricing. So what this says is it says that money is moving away from the EV makers right now into the oils. And we have to be kind of have to be very careful about that because that indeed could be a good area. Now, another area of the economy that's doing particularly well are the recreational boat manufacturers of all things. There's a company called MarineMax, and I do have a bull spread on this. One of the only ones I have a bull spread on, and it's HZO is the symbol for that, and it has pulled back, but overall it's been very nice, and moves up very nice. I'm probably going to be closing this spread just because it violated the 50-day, and I want to stay it above that 50-day line. So I probably will be closing that spread, but that kind of gives you an idea of where the market is moving. The market is moving out of some of the techs into some of the other ones. I also want to show you Apple because that's essentially the bellwether of all bellwethers, and indeed since about that January time frame, and that's the time frame that we're looking at, you can see it's just moved downward. So what I'm saying here is that we kind of got to recalibrate where we're looking for deals. We've been looking for deals in the techs, which has been very good. This is one of the biggest of the FANG stocks, and you can see it really hit its peak at about 145 right back here in the January time frame. So since that time, there has been a lot of disinvestment out of this area. That doesn't mean it's always going to be that way, but it's going to be it's going to be doing probably a little bit worse. So that's kind of the story. That's what I'm kind of looking at right now. So thank you very much for that question. Let's look at AGCO. Yeah, let's see what we have there. AGCO is and this is agricultural tractors. This is a really good area, by the way. Hey, thank you, Jeet. 1256. This is the kind of thing you ought to be looking for. And boy, you were right about this. Look at this. Very nice. Look at the industry group. It's 47, so that's good. Very nice trend on this on this stock. I'm liking this one. Now, this question is, where can we buy it? Well, the best place to buy it probably would be on the 21-day line, because this one doesn't. This last time this one had a base was a flat base back here in December, and that was at 99, and currently it's at 143. So it's appreciated almost 40% in just these last few months. So basically in 4 months it's gone up about 40%. So that's a really good area to be in. Again, there's been just a lot of interest in the agricultural areas. Another one that you might want to look at also is called Mosaic, symbol MOS, and that one has done very well as well. And it's kind of want to show you. So there's sort of a trend, there's sort of a theme here. Oops, there's sort of a theme going on right now in the market, and that is mining, oil, agricultural. This is Mosaic. This is Mosaic. It's also in the agricultural section. So with agro, AGRO, I think that's an excellent choice. Nope, I'm sorry, I didn't give you the right one. AGCO, excuse me, AGCO. AGCO. Let's check the chart on that one. Yeah, and this is an interesting one. It does manufactures tractors. Go figure, but it's doing extremely well. This is the kind of thing you want to be. It's up $2 today. So the checklist is excellent at 88%, and the ownership is increasing. Funds are increasingly saying, "Wow, that's a great thing." Also, and this is what I really like, is that you see this little blue line here. This is the relative strength line, and it's pointing upward, and that's always good. And also has a very high rating of 92. Typically, I like to see at least 80, and this is definitely in that category. So basically, I'm seeing a lot of good things. Where would I buy this? Well, I would wait probably for a pullback to approximately the 21-day line. Now, currently, the 21-day line is at about 138 here. So it just pulled back to that, and it's moving up. So you probably could buy it here, but the thing is, it's a little extended, and a stock that's extended can be problematic. So I kind of probably would be more comfortable if it pulled back to the 21-day and tested again. But if you wait, you might have to wait 3 or 4 weeks for that to happen. Because what I do think is it's trading in a channel right now, basically like this and like this. So if we look at that channel, we could see that this thing may move up to as high as potentially 150, 155 before it reverses back down again. But the overall trend is up, so I really think this is a very good stock. And this is a definitely this is definitely buyable. I just want to say that. I mean, this is a buyable stock, and this is the kind of stock that you definitely should be looking for in this particular market. I mean, agricultural is is a good thing to be in right now. It just really is. So I think that's excellent that you brought that up. Thank you so much for that, Jeet. Appreciate it. I think that's a winner, and I think it could be a quite good stock. It's a little extended above the 21-day line. I would like to buy it a little bit lower, but beggars can't be choosers. You're definitely in the right area of the market with that. So very, very, very good. Okay. Confirmed uptrend. How do you analyze? Very good questions, Ian. Thank you for that. What I'm going to do is I'm going to show you the NASDAQ composite. Actually, what I'm going to show you is I'm going to show you the S&P 500. The way you analyze it is you basically look at the S&P 500. Now, what I'm going to show you here is this is the S&P 500 index. This is the index of the 500 largest funds. As you can see, we are moving upwards. Okay, we are moving upwards here. Okay, so that's part of it. Okay, the reason I use the S&P 500 is because it's more broadly based than the Dow is. But there's basically 3 indexes that I look at. One is the S&P 500, the other is the NASDAQ composite, and the other one is the Dow. Now the Dow only has 30 stocks in it, so it's not as significant. But as of late, it's been very, very strong. That is essentially, the blue chip, what they call the blue chip stocks live in there. And so very, very strong. So this is a confirmed uptrend here. believe it or not. Now, the reason why this is such a tough market to trade is because even though the S&P 500 is an uptrend, the Nasdaq has not held. Let me see if I can get that. There we go. There we go. Okay. Yeah. See the Nasdaq. This is the Nasdaq that I'm showing you right now. This is sort of in a downtrend. Okay. It was moving. It was living above the 10-day line and the 21-day line. And on the 50-day line, boy, it tried to get support there. But here's what happened. Normally, you want to see them come down, bounce, and then go back up. Well, this came down, it bounced, but it broke through the ceiling. It came up again, but it bounced again. So this is why this market is hard to trade, because a lot of the stocks that we expect are going to be the strongest ones and have been the strongest ones for the last year that lived in this NASDAQ composite. But the strongest stocks now in the market are in the S&P 500 and in the Dow. So I want to show you also the Dow Jones Index, because that is an upward index as well. So we are in a confirmed uptrend because the Dow and the S&P 500 are in an upward trend. The NASDAQ, unfortunately, is not. So it's a mixed bag. That's why I'm talking so much about that's why I've been talking so much about moving with the funds out of the areas of the economy like the NASDAQ into other areas that they are investing in, because they haven't disinvested from the market. They haven't gone to cash. What has happened is they have moved out of the higher priced tech stocks into some of the other more cyclical real economy stocks, like the oils, like the tractor companies, stocks like that. Also, and you can see this in certain key stocks. One of the stocks I'd like to show you is Caterpillar. Now, Caterpillar has been doing incredibly well. Look at this chart. It's a great chart. Let me just get rid of the little guy there. There we go. So you can see this. So this has been a tremendous chart. Here, why? Well, this one's in the Dow. This isn't Microsoft. This isn't Apple. The Apple chart. Let's look at Apple. Is downward trending. Yeah, see that? It's downward trending. So that's what I'm trying to say about that's how I analyze the confirmed uptrend is with those indexes. And also I look for a follow through day, and that's a change in direction. So but that's how it's done. We're in a confirmed uptrend, believe it or not. You wouldn't think so with some of the stocks that I like, because most of them are in the NASDAQ. We are in a confirmed uptrend, but it is not an easy market to trade, because many of the stocks that were doing so good, have not done as well. That's why I had that bearish spread on Roku, which pulled back. Now it's pulling up today a little bit, but it's still in a downward trend. So there you go. What do you think about BFLY? Let's look at BFLY for Thai. BFLY. Yeah, that's Butterfly Networks. Okay, well, this is ultrasound, and it's on a chip, so that's a pretty cool thing. I definitely like that idea. Let's look at the weekly chart first. You always kind of want to start with that weekly just to kind of get a smell test. Now, this is essentially a relatively new company. It's not an IPO, obviously, but it's a relatively new company. Unfortunately, though, it is in a downward trend, and I just don't like buying things that are in a downward trend. Right now, looking at the daily chart, as you can see, we have fallen below certain key support. Now, because this stock is less than a year old, but less than 200 days, this has been out less than 200 days. We don't have a black line here. That's the 200-day moving average, so we haven't set that one up. But here's the thing. It is trading below the 50-day. So on this one, I just think you got to be careful. I would be very careful about this. Trend is down. I would don't buy. And the reason, you just don't want to catch a falling knife Oop, it's not buyable. It's not that either. Goodness. Let's show that one. Yeah, the trend is down on this one, as you can see on the daily chart. Let's go to the weekly chart too. As you can see, yeah, we have a downward trend on the weekly chart too. So again, that's really not what we want to be in. And on the monthly chart, it's only been out for a few months. It's only been about 9 months. It came out of the chute really nicely, but then it peaked, and now it's been down. So I don't think you want to be. I don't think you want to be in Butterfly Network. I just don't think so. I mean, it sounds like a great idea, and it may be later, but be careful with this one. I don't think you want to. I don't think you want to get in. I don't think you want to get out. Let's look at and most of these techs, by the way, today, most of these techs are going to show bad charts because that's just the kind of market we're in. Ampg. Let's look at Ampg. Ampg. And let's see if I can bring that one up next. There we go. Okay, Applied Tech Group. This is an IPO. Just came out of the chute. Yeah, just too early. It's $11. Manufacturers component-based amplifiers. That's kind of cool. For military. Military could be a good market. I just really don't have anything. I don't really have anything to say. I like the relative strength at 96, but the checklist is not good. So I would watch this one. This is a better of the two. This is a little better, but I still don't think that this one is viable. So I would watch this, and I wouldn't buy it. And that's just strictly on the trend. It has nothing to do with the company may be excellent. It's just that the trend on this one is sort of down because we just had a trend on it, but it's still very choppy, and it's probably very hard to buy this one. So I would watch this one, see how it trades because it's relatively new, and it doesn't look too appealing right now for me. Let's look at Timber, TMBR. All right. TMBR is the symbol, and Timber Pharmaceuticals. Okay, this is the one that I had on my highly rated list. Thank you very much for this, by the way. This is one of the. I did put out a list, and I do like this one, believe it or not. Even though it is super cheap at $2.04, it's up 14 cents today, which is 7% in this land. Now, the question is, what is going to happen? Well, it had some really good earnings. That was key. And this is essentially a crapshoot. I mean, don't get me wrong. A lot of the rules on this one are going to be a lot different, but I do think this one is bottoming out. Let's look at the monthly chart. Yeah, I think this one is bottoming out and is moving back. And as you can see, it's been around since 2005. So it's I said as you could see it, and then I don't have the chart up. Here we go. Thank you for sorry about that. It's been around since 2005, and it's been increasing in volume since 2005. Now it looks as if, at least from what I'm seeing here, it kind of is bouncing up. So it looks like the trend on this one is up. So I kind of like this Timber Pharmaceuticals. Now, where would I buy it? Well, this is going to be tough to buy. But I like the fact that it's right at this line. Now, if it bounces, and it does look like it is going to, then I think this could make a move all the way up to maybe $3.50 or so, or like that. But if you did that and you were to buy, let's say, 10,000 shares, then that would be a lot. I'm not recommending you go out and buy 10,000 shares, but I'm just saying that could be the possibility here. The checklist is decent. I mean, it's not great. Remember, this stock is under $10. So normally, I don't like to buy stocks this cheap. But this stock is under $10, and it's got a checklist of 66%. So that's pretty decent. The industry is not the greatest. This is a problem. The ethical drugs area is 173. So this is not a great area. But the profit margins are very good in this area. And it has 10 funds in it. Now, no great funds are in this one, but not bad. So this is sort of a mixed bag. For a stock this cheap, I think this one might be worth taking a flyer on. Now here's the thing: if you buy this thing and it moves below the 200-day line, that's about $1.40 a share. You want to sell it immediately. But right now, looks like the beginning of the relative strength line. This is RX rating here, moving up. So, I don't necessarily, again, this is totally on your purview, because this is normally a stock that part of the reason why this has low fund participation, only 10 funds in it, is because many funds will not buy a stock under $10, and right now this is under $10. But I do believe that based on this chart, it has been at $10 before, and it looks like it has made this turn. Now, can you say that that's going to be the case? I don't know, but look at their earnings. Their earnings last quarter were up 256%, and this quarter 120%. So that's very good. They're still losing money. They're still a startup company, but we have these nice sales increases here. So I would kind of want to put this one on. This is one you could possibly buy. Now, I wouldn't have more than a quarter position in this one. So if you have a portfolio that's worth $8,000, one full position would be $1,000. So you might want to buy 100 shares of this, or maybe 150 shares of this. So that would be a good buy. But I do like this one, and this was on the list that I did send out of the 38 very high, of the low price stocks that we sent out last night, and hopefully I'm going to get some more of those kind of under $10 stocks that are really, really good. But I do like this one, Timber. Thanks for bringing it up, Levi. Appreciate it very, very much. All right, we also from the list. Thank you. Let's look at Grow, GROW. Thanks for bringing this up. I appreciate these. This is Global Investors. I really like this one. I actually like this one better than Timber. And this just is kind of moving nicely. It's not a super exciting one, but it has options on it, and it's a $6 stock, and it's a little bit above its proper cup base at $3.90, but it's moving very nicely. It's got also relative strength very high, 98. I'm always liking to see that. Also, we have the trend on this blue line here, and that is the relative strength against the S&P 500, and that's moving up. So very nice. We're also above the 200-day, and we're also right at the 50-day moving average. It looks like we may have a bounce here, and this would be very nice. Now, if it bounces here and moves above about 8, then it's probably going to go higher. Let's take a look at the daily chart to see if there's an entry point here. I do believe that we got a bounce. Yeah, see, we got a bounce right at the 50-day line. It pulled down. It went right to that 50-day line, and then boom, it went right back up. So it's up 2% today. It's not a very expensive stock, $6.92. Again, a stock like this is going to have trouble attracting funds until it gets to about $10, but that may be an advantage for you because it's looking strong. And if this thing gets past about $10 a share, then it's very likely to attract some funds. Let's see if there's any funds in it currently. The checklist is very good. It's 66%. This is my minimum, but on a stock that's under $10, this is indeed a good price. The ownership, 23 funds are already in it. Now, that's pretty remarkable considering most funds do not allow stocks to be bought under $10. So that's looking very good. Now, what moves a stock? Well, a stock is moved primarily by funds coming into it. So a stock has to be extra powerful under $10 to be viable. But I'm liking this one as well. Let's look at the sectors that this is in, just to make sure. Kind of give this a smell test. It's not bad. 197 rank of so it's a 70. So we're in the top third. So that's very good. We have some very good stocks in this sector. Interestingly enough, the earnings per share is quite good in this one, even though it's such an inexpensive stock. So I do like this overall. So thank you very much for bringing that to attention, and thanks for taking a look through that list very, very much. All right, let's take a look at, and that's Grow, and that's U.S. Global Investors, and that's the name of the stock. So kind of interesting. Let's look at WPR. WPR. Oops, wait a minute. Okay, WPR. And it'll take a second for that to come up. It's not being recognized. Why is that not doing? Oh, I'm sorry, WPR. Well, it should be right. WPR. Well, I'm not recognizing it, so I'm sorry about that, Rafi. I apologize. It doesn't seem to be coming up. Heck. I'm sorry. Let's take the next one. TMUS. Now that is a familiar symbol. TMUS. There we go. T-Mobile. Not a big fan of the telecoms. I'll be honest with you. I am not a big fan of the telecoms. And this one looks like it's pulling back. Now, of course, they merged with Sprint, but just not a fan of this group very much. It's pulling back. It possibly could reverse. It's in a consolidation. It's called a flat base on stage 1. 135 is the buy point. We're below that at 124.64. Not 33 relative strength. We also have a very uninspiring relative strength line. We have a lot of selling activity. I think you want to avoid this one. I really do. It's got a good checklist, though. 7 out of 9, so that's very good. 77%. The ownership on this, very strong ownership because, of course, the telecoms do pay dividends. So they typically have very strong fund ownership, especially in the dividend funds. 39, excuse me, is the number of funds. So that's looking good. Here's the problem that I see with T-Mobile. T-Mobile is 151, ranked 151, and there's 197 ranks. So here's the thing in the sector. I just don't want to be in those right now where there's so much change going on in the market. I just don't want to be in those underperforming sectors. I just don't. It increases the chances of success if we're not in those underperforming sectors. So I just would have to pass on this one. I just think, unfortunately, this is not one that I buy. So I would pass on TMUS. I just would. I would pass on this one. Oops. Well, that's not, I didn't. There we go. I would pass on this one. I just don't think it's strong enough. I think there's better. I think it's just better. There's better things out there right now to buy than this one. So, not the greatest. All right. So let's take a look at people from TikTok. Thanks for holding on. By the way, I am broadcasting live on YouTube, so you can jump right over to YouTube and see the charts that I'm using. Hi, would you ever consider a virtual meeting? Absolutely, with Bruce. Here's the link to his channel. Well, I do have a Discord channel as well, so maybe you could jump on over there. I can tell you more about it later. Let's see. Anybody? Okay. Thank you, everyone on TikTok. Thank you so very much. All right. What do you think about CTRM? Castor Maritime. CTRM. Let's take a CTRM. That's a suggestion from TikTok. Can't show it on the screen, but CTRM. But I can definitely take a look at the chart. Castor Marine. It's really a cheap stock. It's 78 cents. This is kind of very much of a penny stock, but it's got a relative strength, a very high one. Of 98. Is this investable? I don't know. This is tough. This is tough to see. The thing about this one is that for about 25 years, this has not really been a great area to invest in. Sea shipping has just been horrible. But interestingly enough, the world has changed, and actually some of these are doing quite well. This has a checklist of 55%. Which is, not terrible. I mean, it's not great, but it's not terrible. It actually has some funds in it. I can't believe this. There's actually 5 funds in this one. So here's what I would like to look at it against, because there is. Let's kind of look at get an idea of what is in the. There's a company I want to look at. It's called Zim Shipping, and this used to be called that's Global Shipping, excuse me. This is the Global Shipping Lease. Let's look at Zim. This is one I think you might, if you're interested in the shipping area, this one might be one you want to look at. It's called Zim Shipping. Now, it's a little bit more expensive. It closed at $24.64. Now, this is a relatively new IPO, but it's a very old company. This company has been around since at least 1949, and it basically is based in Haifa, Israel. and it's done quite well. It's moving up very nicely. There's a buy point on it at 22.58. So if you want to be in the shipping area, this is a tough area. I would recommend Zim, Z-I-M, instead of, oops, I'm talking all about Zim, and I have that one up. So this is Zim. This one is Zim, and it's a good chart. So you might want to, if you're interested in the shipping area, and interestingly enough, for the first time, really since I've been trading, there is movement towards the shipping area. Believe it or not, it's got a 66% checklist, which is excellent, and it does have almost zero ownership by institutions. This is almost all owned by stockholders, but it seems to be doing well. So there you go. Zim Shipping. That one might be one you want to take a look at. All right. Let's see about Grow TM News, CZR. Let's look at let's look at CZR. See if I have. Oh, that's Caesars. And Caesars should, Caesars is looking good. It may be getting support at the 50-day line. It looks like we may have a reversal, but this is really too early to say. This is not necessarily a good buy point. I would wait until it moves above the 21-day line. So basically, I'm going to draw a line right at the 21-day line. If this reverses above this 21-day line, this line here that I'm drawing, this is right at the 21-day line here. If it moves above that, then I think this might potentially be buyable. It's very strong. It's got a relative strength of 95. So here's the thing. I wouldn't buy it now. I'd wait to see if we've got a reversal above this 21-day line. But the 21-day line is basically right at about 89. 80 is right about where that's at. So currently, it's right below that at 87.13. So here's the thing I would recommend with Caesars. You probably, if you want to get into it, and I do think that with the reopening, Caesars should do fairly well. So the thing that you might want to look at doing is doing a buy stop limit order, and that's what I would kind of recommend getting into it. Basically, buy stop limit order for, let's see, I'm gonna say, because I want to track the price here, make sure I've got that right, about 89.60. So about 89.60, and then I would add 10 cents to that for 89.70. That's where I would probably want to come in on 89.60. So this is kind of where I would want to come in on this trade, would be to set a buy stop limit order, basically so that as it moves above this line that I've drawn here, that it will buy the stock. And the way you do that, of course, is you set the buy stop limit order with a actuation price of 89.60, and then you set it 10 cents. You set the limit order 10 cents above that at and for a total of 89.70. Excuse me, I put that in there wrong. Sometimes I don't edit these right. So for 89 for 89.70 there. So that's where I would be looking to get it. I like Caesars a lot. I do think it's one of the better of the gambling stocks, and basically it doesn't look like it's broken down. It looks like it bounces off the 50-day line on a regular basis. So it looks like we have an ascending chart. So that's looking very good. And so Caesars, I would definitely take a look at this one again, but I wouldn't buy it right now. I would wait until it moves above that 89.60 level, and then that's where I would buy it. It's got a good checklist, 66%. I definitely like that. There's quite a few funds in it, 716 funds. The sector is good. It's 73 out of 197. So the sector is very good on this as well. So all in all, I like Caesars. I definitely like the chart, but I don't think you want to buy it right now. I think you want to buy it just as it's moving above with a buy stop limit order. So thank you very much for that question. That's an excellent question. All right, let's look at NEO. Now, NEO is probably not going to be the kind of chart that you want to look at. I want to get you prepared. This is why it's so important to set why it's so important to set stop losses when you have a stock like this. As you can see, it is sort of fallen. It's like that old thing: I've fallen and I can't get up. These are the marks here. These are all the marks of everything that I basically have been watching on NEO. NEO right now, it says it has a relative strength of 99. Well, the problem with that number is it's 99 for a year. It's been doing great up until about January. Remember all that everything basically peaked in the kind of this techie Nasdaq-y stocks in about the second week of January, and since then it's been down. So this essentially follows the same chart as Tesla does. Tesla really is the bellwether in this area. And as you can see, it's a very similar chart with Tesla. Now, I want to show you the chart for Ford because it does look like Ford is going to start eating some of these people's lunch because companies like Ford are able to outproduce NEO and Tesla and all those companies. I'm not saying anything bad about Tesla or NEO, but I'm just saying in reality, you're going to see a lot of this slack taken up by Ford. Now, here's the thing: Ford is a very boring stock. I can't say that I've owned it, but in the past, but it's not a very exciting stock. But it's showing some very nice strength, and the chart is right. So, if you want to be in this automotive sector, and I still think it's a very good sector, I think you want to look away from the NEOs and more to the GMs and the Fords, because I think that's where you're going to find the best strength. 77% on the checklist, so that's excellent. This is the Ford checklist. Also, the industry rank is not very good. This industry rank, as the price of Tesla stock has fallen, so has the rank of the sector. It's fallen significantly to 107. But we do have, we do have a lot of funds in this one. 1477 funds are in this, and so it's good. It's a mixed bag. But where can you buy a stock of a company like this for around $12? It's very difficult to do this. So, if you're looking at NEO, I would Mark, I would take a look at possibly looking at Ford a little bit. There is a key buy point on it. It's about 12.15. It's above that now. It's up a little bit today. It's up about 2.6% today. Not a whole lot. It's kind of a boring stock, but this is where you probably want to be in this sector of the economy. So I would not recommend NEO. That's the bottom line. What to do? WWPR is up 30% today. Let's take a look at WWPR. This is probably a relatively small stock, but I don't know this. I don't know WWPR directly. UK installs solar power. Well, yeah, but it is. But look at this chart. This is not a good chart. Just want to show you this, Levi. Yeah, it has pulled up to the 50-day line, but the trend is not good. The trend is downwards on this chart, and this is very thinly traded. So let's take a look. It's got a 77 checklist. That's not bad. The industry just isn't any good. 178 out of 197. So I don't like to be fishing in those holes. We're still above the 200-day, which is good. So let's look at the monthly chart. Yeah. Okay, so it's very spiky. It looks like it's topped out. I probably would avoid this one, just to be honest. I probably would avoid this looking at the daily chart, because I am seeing essentially this trend here. I'm seeing that trend, and it's a downward trend. So that is my take on that. I probably wouldn't. I mean, obviously this is just my opinion, but I think that it's going to be probably not. Okay, let's look at General Electric. Hey, interestingly enough, I have an admission to make. I went to Washington College in Chestertown, Maryland, very small little school in Maryland, way back in when the dinosaurs ruled Earth. Well, one of my classmates is ended up becoming the CEO. Did much better than me of General Electric. He won't even answer a call, but it's kind of interesting that would happen. Nope, that's GM. Let's look at GE. And the thing is, if anybody can turn it around, this guy can, because he ran a company called Danaher for a long time. I'm liking this chart, actually. I have to say, he's getting rid of a lot of the problems. His name is Larry Culp, and he was a classmate of mine in undergraduate school. Now, of course, he did far better than I did in terms of everything, but he is getting a handle on General Electric, and one of the ways is getting rid of GE credit. And I think overall this is a very good chart, considering if you look at it. I think this is a very, very good chart, considering the behemoth this one. This one had been in the Dow for, I think, 120 years, and then it got out of the Dow. But we're moving past a key consolidation level of about $11. So this one, I'm looking for a place to buy this one. I think this potentially could be buyable. This is the monthly chart. We have recovered back. If we move over about 14, and we're very close to that, then I think we're starting to see it basically. So I definitely would watch this. I wouldn't buy this one necessarily right at this moment, but I'm kind of bullish on this, to be honest. GE could, above 14. I'm writing this down on my little notepad here. This could be a very good deal. So, Jeff, I think that is an excellent. I think that is an excellent take on this. I really do. I actually, I wouldn't put my whole portfolio in this one, but you know what? In this kind of environment where we're moving from some of the techs into the industrial, you can't really get more industrial than General Electric. The big problem with General Electric, of course, is its debt load, but they're dealing with it. So I think that this is a very good point, and this is definitely a potentially very good watch list. This is a turnaround. I mean, there's no question that General Electric is a turnaround, and I think this one, some of these really old economy stocks, I've been recommending. I mean, like Ford. I mean, whoever thought that I would be buying Ford? It's just it's 110 years old, but a lot of these industrial stocks will do well going forward. They absolutely will, because of the way the market is reallocating right now. So very, very good. Thank you, Jeff. Let's look at ENPH. Yeah, let's see there, ENPH, and that is Imfries Energy. Okay, well, it's solar. I kind of like that area, but don't know much about this company. This is also trading very similar to most of the Nasdaqs, the Nasdaq stocks, and unfortunately, I don't really like this. I don't really like this trend. I'll be honest with you. I don't like this trend. This is a downward trend. I mean, we're still above the 200-day average, but it doesn't look like when it pulled up, it held at the 21-day line. So you know what? I think this is a potential short. I wouldn't short it right now, but I think if it makes another run on the 21-day line and it fails, this could be shorted. So I would not recommend this one if you're going to go long on this. I just wouldn't recommend it. The chart just doesn't look the kind of way I think it needs to look, unfortunately. EENF is oil and gas startup. $3. I have a limit on my oil and gas. I have a limit on going with cheap stocks. I mean, I will do under $10, absolutely, and I think there's some real value there with some of the legacy companies. I mean, I think Jeff's. I think the thing to take a look at GE. I think that was a great suggestion. It's a great chart. Ford. There's also some very, very good oil and gas companies like Ring Energy is another one that I really like. It's in the Permian, and it's REI is the symbol. It's been around forever. It's not a new company. It's not it's a little bit volatile. It's like a $2 stock. I just want to show you the chart on it. It's pulled back a little bit, so I wouldn't be a buyer until I saw reversal. But it's up today, and this one can be very spiky. But it's a small driller. I mean, this is not a big company. And the checklist is not stellar. It's only 44%. But I do think in this area it's got a relative strength of 97, which is again for the entire year, and it came essentially really up off the pavement because I'll show you the monthly chart of this one. You see it was moving down, 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 and then boom, we got to 2000, and this is why I think that this is an area that we might want to look at because this is the oil and gas area. Because these stocks are so cheap. Now, can you lose your money? Absolutely. But this stock has been around forever and a day. This stock is at least 70 years old. Okay, this company is at least 70 years old. It's been on the New York for a long time, and it has 52 funds in it, which is amazing, considering it's under $10. So, do I like the sector? Yes. It's ranked number 4 out of 197. So these are the kind of plays that you want to be looking at least for right now, as the market is reallocating. We'll see what happens. We'll see what happens, but that's not a bad place to be. So great. Thank you for that. All right. Let's take a look at American Airlines. This is one I think that you should not be in. I flagged this one. AAL has been flagged as an overvalued stock. This is overvalued, I believe. I believe the stock is overvalued. I don't think you want to be in American Airlines. I just don't think you want to be in. And for a lot of reasons that I don't want to go into here because it could take me about an hour. But I don't think American Airlines is healthy right now, even though it says relative strength of 84. I think in this group, and this is a tough group because the pandemic has really hurt American Airlines. I think the stock you want to be in is the one that does the regional because their cost structure is better, and that is a stock called Mesa Airlines. MESA is the symbol on that one. That's the one I think you want to look at. This is a much stronger stock than American Airlines, and it's less expensive. So this one, I believe, has turned the corner, and I think it's moving up. It's also 98 relative strength. It's stronger than American Airlines. So Mesa, and you can see this chart is a better chart than the American Airlines chart. So if you're looking in the airline area, I think you want to look at Mesa, MESA, as opposed to AAL. American Airlines has a lot of legacy costs, and even though they are doing far better than they were, I think you just got to be really careful with this stock. This stock has some essential issues that I don't think are being addressed, and so that's kind of the long and the short of it. Well, I've gone on and I've yammered on a whole hour, and thank you so much, everybody, for for sticking with me. Starting a new Discord room that you might be interested in, and just kind of want to put that up on the out here for everyone so that they can see it. But basically, this is this is a room where I actually explain trades in detail, and I'll be on there actually tonight at 6 o'clock Central, at 7 o'clock Eastern, for about 45 minutes, from 6 to about 6:45, and we'll be going over some charts and just getting acquainted. Really just started this, and it's www.vinny and like VHINNY.com/Dallas Trading Floor. So that's where you can get onto the Discord to ask further questions, where I'm not just yammering on. So thanks, everybody, and I'll be back tomorrow on Dallas Trading Floor. I'm on YouTube as well as TikTok, and also on Twitch. I'll be back tomorrow at 2:30 Central, 3:30 Eastern. Thanks so much, everybody. Happy trading, and stay safe out there.